You can actually go and buy physical gold if you want to, but it's a lot of things you have to think about. You have to think of transportation, right? If I woke up today and said, I want to buy gold, I need to figure out where to get this gold from. I need to now transport. If I'm getting it from everybody gets it from Dubai, apparently. If I'm getting it from Dubai, I have to pay for transportation. I have to then pay for storage. I have to store the gold, right? So am I going to store it?
You're getting robbed.
There you go. And that leads me to my next point. I need to pay for insurance, right? Wow, so theft insurance. So if you're buying physical gold, there's so many things to think about. So what I normally do is just advise people to buy exchange traded funds.
Welcome to another episode of Paid in Full, where we talk about how money is made in any space, profession, or industry. My name is Ogieva Imasuen, and today we're speaking to the world's most endurable value, gold. So joining us is a serial gold investor with over 15 years of experience across London, Johannesburg, Accra, and Lagos in emerging and frontier markets. Frontier markets asset management. You know, he has developed deep insights into asset class strategies and portfolio diversification. Everyone calls him Arnold Dublin-Green, but I call him ADG. Arnold, welcome.
Thanks for having me. Thanks for having me. Thanks for having me. Thank you. So at first, when you were talking about the most valuable commodity, I thought you were talking about me.
That's why you're here.
I was very flattered. Calling me the most valuable.
Yeah, well, you represent it too. So still, So for the audience, I've been trying to get Arnold for so long, but so busy. And he's also been doubling on our Drinks and Mike's podcast as well. But today, based on a lot of requests from our audience in the comments, they all want to know about gold. So today we'll be learning how to get paid in full with gold. Arnold.
Yes.
Let's get to it.
I'll try. I'll try my best.
So before we even go into how the depth of the conversation, right?
Yeah.
I know you have a very, very strong knowledge on the history of gold in Africa. Okay. Really. So I'd like you to, shed some more light, tell the audience on the history of gold.
On the history of gold. Yeah. Billions of years ago in a land far, far away.
Yeah.
But billions of years ago.
Fair enough.
So in A-level physics, there's something called, we learned something called supernova. So supernova is the death of a star. Right, so when a star dies, it sort of explodes. And it loses energy, and it explodes. Explodes into tiny particles, and these particles are colliding. The protons and neutrons are colliding. And this is I'm getting somewhere with this. So so physics 101.
Yeah.
So when these particles collide, so the particles collide and the gas collide, these tiny particles come together to form a sheet of precious metals, right? So these metals are uranium, platinum, gold, and a few others. And so this collision, the gas and the tiny particles come together and then collided on Earth. And when they collided on Earth, became these precious metals, so gold, platinum, uranium, and the rest. So that is the history of gold for physics lovers. Or did I go too far?
No, trust me. I actually just learned. I mean, my idea of supernova, I think, is there's some entertainment group or fashion line or something out there that's supernova.
I know it's also a Marvel character as well. It's a superhero called Supernova.
Yeah. So I've actually never bothered myself to know what it means beyond that.
There you go. So thanks for to physics.
Yeah, thanks for sharing. So we're done physics.
But anyway, the history of gold in Africa, right? So gold has always been a currency, or it's been a currency for us a while ago. I often speak on gold as a trading currency across different regions. There's a reason why we call Ghana the Gold Coast. So northern traders would would come from Nigeria to Ghana to exchange spices of whatever they had with Ghanaians to exchange spices with gold and take the gold up north to Morocco and the northern countries, and then use that gold to buy European material, European products, and then come down to sell it to southern Nigeria. So gold has always been a currency that allows cross-border trading.
Yeah, because it's flat, it's the same thing.
Gold is gold.
Gold is gold.
Yeah, yes.
Okay. Thank you for shedding some light on it. So definitely, so you're saying Ghana is the Gold Coast, right?
Yes,
what's the Gold Coast?
It was called, yeah.
It was.
Probably the name of Ghana was Gold Coast.
Really?
Yeah, it was called the Gold Coast.
I'm pretty sure the Ghanaians will be happy about that.
But I mean, there's gold here as well, right? So, speaking of particles that landed on Earth, it makes you wonder what landed in Africa billions of years ago to form this, right? So that's another conspiracy that we can go into another time. But gold,
that's a different conversation.
Yeah. But it's also here as well. It's in southern Africa as well. So gold is all across the continent.
Oh, that's nice. So with that, thanks a lot for that, the history as well. Can you explain why gold remains a relevant investment in Nigeria today? I mean, considering inflation and the dwindling effects.
Yeah, so gold is a relevant investment asset or relevant asset across the world, right? And it's become even more relevant, in my view, over the past maybe 3 to 4 years, whenever 2022 was, 3 years. When you had the Russia-Ukrainian war, and the US sanctioned Russian assets. The world watched on as the US sanctioned Russian central bank assets, right? Dollar assets, treasuries and everything, and which made Russia lose a bit of spending power. So when the world watched that, everyone sort of got nervous and said, hold on a minute, we need to diversify away from US treasuries and US dollar, especially central banks around the world.
Yeah, so there's no control. Sorry for to reduce the control.
Of course, yeah. Okay. So it just made everyone nervous, which is natural. So what it meant was central banks now started to diversify away from US treasuries and US dollar assets. Yeah. And the next best thing for them was gold, right? So if you look at central bank purchases of gold, pre-2022 to then post-2022, it literally doubled every year. So let's say it was 500 and whatever, 500 tons a year. It went up to 1,000, literally doubled. Wow. And when you look at gold reports from 2022 to 2025, gold reports mention global central banks are buying gold at an astronomical level. They were literally doubling their efforts in purchase of gold. So what that meant was, naturally, if there's a higher demand on the product, the price goes up.
Yeah, for sure.
So, gold has certain demand legs. It has central banks, it has jewelry, it has ETFs, which is investments. It has investment, and it has technology as well. So on the central bank demand side, it doubled. So when you look at gold prices from 2022, is a massive rise in gold. So gold that has always been a safe haven asset now also became safe haven, but even more of a structural global change with fear of not knowing what America is going to do next. And then obviously with Trump coming in as president and, in everyone's eyes being a little bit, I don't want to use the word chaotic, but unpredictable. I think
that's a better way to describe
unpredictable. It made gold an even more interesting assets. And, if the central banks are buying, if it's good enough for the central banks for the unpredictability of America, then it's good for investors.
Yeah, fair enough. Thank you for shedding light on that. And my second question, really, by popular demand from the last episode we did on Everyday Money Matters.
Okay.
Right? So a lot of people were asking why you advised. The conversation was Nigerians investing a smart investment for Nigerians in 2025. Gold.
Yeah.
So the question is, can you explain, to us why gold is actually a smart investment in Nigeria today?
Yeah. So for me, it's a tool of diversification, right? So it's not necessarily it's the only thing to invest or buy, to invest in or buy. But for me, it became more important for me simply for everything I've mentioned, and just also on an investment side where you're having heavy returns because of this strong demand in gold by central banks. There's also a huge demand in gold by investors, global investors, right? And global investor demand comes in forms of something called an ETF, an exchange traded fund. Also comes in the form of physical bar and coin. So when you're seeing this huge demand, it makes sense. So when you're an investor looking for catalysts for an asset class, or what's going to make the price go up, it just made sense when I'm seeing all this going on, and I still think the structural play is coming in where there's this huge mistrust in American and US assets. It just made sense for gold. It makes sense for everyone to add gold to their portfolio in a massive way as well, more than they had or we all have in the past.
Okay. I believe that's pretty clear enough. Yeah, clear enough. And so I was going to ask how gold has performed, right? In the last, say 4 or 5 years. Okay. I mean, you've pretty much highlighted that. Yeah. Anyway, so we know performance has been good. Yes. It has risen. So what are Nigerians, seeing in the local naira price performance? Okay. So one of the best ways one of the best things I advise, one of the ways I advise people to buy gold. I mean, there are different ways you can actually use gold as an investment, right? You can buy something called futures, which is derivative, which can be quite risky, which is quite a common way for most people to buy gold or hedge their portfolio with gold. But there's ETFs, like I mentioned, right? Exchange traded funds. So ETFs make it easier for retail investors and general investors to get exposure in gold. You can actually go and buy physical gold if you want to, but it's a lot of things you have to think about. You have to think of transportation, right? If I woke up today and said I want to buy gold, I need to figure out where to get this gold from. I need to now transport. If I'm getting it from everybody gets it from Dubai, apparently. If I'm getting it from Dubai, I have to pay for transportation. I have to then pay for storage. I have to store the gold, right? So else you're getting robbed. There you go. And that leads me to my next point. I need to pay for insurance, right? Wow, so theft insurance and different things. So if you're buying physical gold, there's so many things to think about. So what I normally do is just advise people to buy exchange traded funds. So what that means is there's an entity or a bank that has done the hard work of transportation and everything and storage costs and insurance, and they've put it in the vault somewhere, and they then launch an instrument that the best word I can use is mirrors or correlates itself with gold, right? The price of gold. So globally, there's the Goldman Sachs physical gold, which I also recommend. But as a Nigerian, there's an ETF called the NewGold ETF, which is I think APSA is a custodian. So I normally recommend that. And you can actually see the performance of the NewGold ETF versus actual gold, and you can see where the naira component comes into play, where the devaluation of the naira and the uncertainty with the naira and the constant depreciation of naira has been positive for the new gold. Because remember, NewGold ETF, because remember the NewGold ETF is based on the physical price of gold in dollars, and then giving it to you in naira. So when naira gets weaker, the price of new gold goes up. And there's other things in play with the NewGold ETF, right? So I'll give an example of performance. So year to date, gold has returned about 24%. NewGold ETF is up 90%. Okay. Right. Yeah. And it's up significantly even when we spoke about it a few months ago. So many things come into play, right? So there's the naira component. There's also the illiquidity aspect of the NewGold ETF that will cause the price to go up because of the demand coming from a lot of investors here that are now realizing I want to buy gold. But it's one of the best ways, I think, for a naira investor who has no contacts in Dubai to buy physical gold, who might not be able to go to a global exchange to buy the Goldman Sachs ETF, and who might not be knowledgeable enough to trade derivatives like gold futures or gold CFDs. The NewGold ETF is an easy way to buy gold. You can just call your broker, call Quadros Capital, whatever your broker is, and your broker will get you should be able to get you into NewGold ETF within seconds, in a perfect world, within a few minutes. Okay. So what you've said, so what's the difference really between investing in spot on gold and investing in naira denominated gold, like the NewGold ETF.
Yeah, so that's the main difference, right? So the cost that comes in buying gold and the stress that comes in sourcing gold and ensuring the gold that you have, the ETF just makes it easier for you. The ETF comes at a cost, but there's normally a management fee of maybe 0.2, 0.4%.
So
I can't remember, but it's quite low, right? Because the guy that does structures ETF needs to make money too, right? So you need to pay him. Yeah. But yeah, so that's the difference. Really, it's cheaper, it's easier access. Even if you have there are some apps that give you access to even the other ETFs, like the Goldman Sachs ETF, right? Your Bamboo, your Trove, you can actually go on and type in, I think it's AAAU. And then you can actually buy physical gold. You can also, buy, physical gold ETF. So ETFs for me is just the best way. I always advise people just to get exposure to gold. Because you're not trying to trade it to speculative, right? You're buying it and
it's fixed, it's on the platform.
It's your view is medium to long term, especially if your view is like my view, that is a structural play and it plays on a global shift, global power shift, a global trust shift. Then your view is quite medium to long term. So you can comfortably just buy the ETF and sit back.
Yeah, so definitely from what you're saying, that means there are definitely a few advantages and risks involved. Can you highlight a little bit of both sides of the fence? Yeah,
so I mean, the risk, let me start with the risk, right? So the main risk is I could be wrong on gold, right? Okay. So gold goes down, nobody wants gold anymore. The world is a safe place again and nobody wants gold anymore. So the price of gold goes down, the price of the ETF goes down. But the benefits are, I guess price of gold goes up, your ETF goes up. The risk of the ETF is you're putting your trust on an investment company or a bank or a financial services business to mirror the price of gold with the ETF. So that's a big risk, right? Because they could get it wrong. Right, so something could happen. God forbid, but something could happen, and this goes off. But that's the risk of investing. But you are rest assured that this ETF mirrors the price of physical gold, which it has. Goldman Sachs ETF that's priced in dollars with the price of gold is up 24% with the price of gold 24%. So they mirror each other. Okay.
Okay, so
it mirrors physical gold.
Yeah. So how would you say Nigerian investors should consider gold alongside money markets, fixed income, and equities?
Yeah. So I mean, Nigerian equities. I'll start with equities. Nigerian equities have had an amazing run this year, right? I think it's up 35% or so year to date in naira. I'm just thinking through now, right? So it's had an amazing run. And I wouldn't say take one or the other, right? I would say look at the potential risk coming in Nigerian equities, right? So let's just do some quick economics, some quick economics or micro rather. Okay. Equities markets has returned to 35%. So your historical market return has gone up. The risk-free rate, which is your treasury bill, has gone down, right? So naturally what this means is your risk premium is wider. What that means for the equity markets is if your risk premium is wider, your cost of equity is now higher. So your valuations go lower. So I'm not saying that Nigerian equities valuations are lower and it's nothing. I'm just saying that it means that there's a potential that you won't enjoy the rally that has happened. Okay. Right. There might still be a rally going forward for the equity markets, but it's not going to be as aggressive as it was. I'm not saying the good times are over, but the equity good times have sort of calmed down a bit because it's had a good run. Right. So your risk premium is now wider. Your risk-free rate has gone down. So what that means is you might want to diversify a little bit of, not diversify away. I don't like using that word because I don't want to discourage anyone from equity markets. I still think that Nigerian equity markets has a good run. Yeah. I still think that there's more story coming in with, valuations might be lower due to your risk premium being wider. There's still a story of, Nigerian equities being underowned, right? With what, when you look at the investors in the equity markets, it's nowhere near what it used to be. And they will come back. On the local side, asset managers still have about 0.8% exposure in equities. Well, the equity portion of the mutual funds about 0.8%. So there's room for them to come in with more, right? For local investors to come in more, there's room for local pensions to come in with more. And then on the global side, in 2023, Nigeria got reclassified. I don't want to use the word kicked out. Got reclassified on the MSCI. It's a strong word. Nigerian equities got reclassified from frontier markets to standalone. What that meant for global frontier investors is they now remove Nigerian equities from their portfolio. I think that with FX reforms kicking in, I think over the next maybe 1 year or so, from now to maybe mid next year, Morgan Stanley will reclassify us back into the frontier index. Once that happens, you get inflow. New money, fresh money coming in. So I think that. I don't want to say don't buy Nigerian equities. I think Nigerian equities is still a big buy, huge buy, especially on the capital flow catalyst coming in. But it doesn't hurt to also look at your portfolio to say, let me diversify. Right, and hold gold, because on the global aspect of things and even on the currency aspect of things, we can't deny that on the medium to long term, our currency will not depreciate. I don't want to use the word devalue because devalue is quite aggressive. Depreciate is modest, right? From the year that I was born till today, I can't look back before the year I was born. The year I was born till today, I've seen the naira weaken. There's nothing that tells me that the naira will weaken from today to the year I die.
Yeah, exactly.
Right? So we have to be wise in that. So gold is that nice currency hedge for you as a Nigerian investor. On the treasury side, the money market side, like I mentioned, your risk-free rate has gone down, which means the return you're getting on treasury bills has gone down. You know, the start of the year, we're seeing the 1 year treasury bill around 27, 28% yield. And now it's about 22, 23% yield, right? So you're seeing the collapse as inflation goes down, as we expect the Central Bank of Nigeria to reduce monetary policy rates. Treasury bills will also go down, which is a sign of a good, more stable macro environment. Okay. But it also means that the returns you get in your treasury bill goes down. Your returns you get in your bonds go down. So it makes sense to now look at gold as that asset that gives you some upside. You know, the downside about gold, which a lot of people don't like gold compared to some of these asset classes that I've mentioned, is, you know, with gold, with stocks, you get dividends. With bonds, you get coupons. With real estate, you get rental income, right? With gold, there's no yield. Yeah. You just sell, right? You're making money on the capital gains. That's the only thing. But you still get that hedge on the currency, right? And then you spoke about real estate. As much as I love real estate to a degree, I find that real estate in Nigeria has poor rental yield, which is good for me that I'm a renter. But from an investor's perspective, you're getting 5 to 7% rental yield on your property. There's a lot of headache that comes with that as a landlord, right? So there's a lot of costs to look into, you know, maintenance, your tenant maintenance, all those things. Yeah, all those things is quite impactful. Has strong impact. Stocks pay better dividends than real estate's rental yields. Bond coupons are better higher than rental yields. For me, capital gains on gold makes more sense than a rental yield in real estate. So for me, an investor should definitely have gold in the portfolio. I mean, I could also go into crypto. I hate to do the gold versus crypto thing as well, but crypto is a speculative tool, right? Till today. I mean, I like crypto. My view on crypto has changed massively. A year ago, the US finally allowed Bitcoin ETFs, exchange traded funds. So you had the lack of BlackRock and Fidelity launching, you know, ETFs for crypto.
I've heard they actually bought a lot of crypto. Is it Bitcoin?
Bitcoin. Yeah,
they're the largest holders now in the world.
Yeah. I believe so. I don't follow the story that close, but I believe so. Yeah. So those sort of things, right? And then I believe in May, Morgan Stanley said you can now trade crypto on their E-Trade trading platform. JP Morgan announced in June that they will now start taking ETFs as collateral, Bitcoin ETFs as collateral. Really? They're also now looking at taking, I think in the next 6 months, they'll now start taking Bitcoin, Ethereum, and XRP, I think it's themselves as collateral. So that for me takes Bitcoin and crypto from a fringe investment into something serious, right? Yeah. But it's still a speculative tool. Well, a lot more speculative than gold is. Gold is a safe haven tool, right? So Trump tariffs come, or whatever it is that comes tomorrow, you're going to see crypto really get volatile, right? On the other hand, with gold, these things actually make gold more valuable. right? So you in a perfect world, you should have a negative correlation. So it actually makes you want to hold gold, as well as this other asset classes.
At least there's the existence of comparison and all that.
Exactly. Yeah.
To throw this in, do you think Tunji will agree with you though? Crypto wise?
Yeah, I mean, listen, because the thing is, I'm not bashing crypto.
Yeah.
I'm not. It's what I'm saying. Crypto is become, as in my eyes, a more serious asset than it used to be.
Yeah, fair
but you can't decouple crypto from macro volatility, right? So the more volatile the world gets, crypto really reacts. Naturally, as more people hold, the volatility, as more people get involved, volatility should reduce naturally, but still, crypto is still seen as this good time currency, this good time investment. And when times are good, equities, everything is good. Let me buy some crypto, right? Which also means that in the bad times, crypto also feels that downside. Whereas gold is a safe haven.
It actually is though.
Yeah.
Thank you so much for breaking that down. So we'll go into how the money is made now.
Okay.
Right? Yeah, we are just
that's
getting
interesting.
there.
Yeah. How's the money made? Okay, I want to know.
Yeah, exactly.
Yeah.
You are going to tell me.
Okay.
So how do investors earn from gold ETFs?
Okay.
Through price appreciation,
Yeah.
dividends, or other mechanisms?
Yeah, so unfortunately, there are no dividends, man. There's no dividend, there's no coupon, and that's why some people don't like it, right? That's why some people they shy away from gold, because people like that income generation, that passive income. I like passive income. It makes sense to get passive income.
Yeah, fair.
But it's really just buying low, selling high, right? So you do the work, you realize, for example, I talked about the demand legs of gold, central banks, jewelry. One thing I have to mention though, the price of gold is sort of stopped appreciating recently, and I'll tell you why, that also changes. So, I talked about the demand aspect of gold, right? Central banks, jewelry, technology, and investment. So you're having record flows of investments, record demand, investment. I mean, the year-on-year, quote unquote, demand for gold has gone up about $132 billion.
Wow.
Record high, right? Gone up to rather $132 billion, which is huge. But what you're seeing now is that the price of gold got too expensive for on the jewelry side, right? So what that means is, quote unquote, on year, the jewelry demand of gold has gone down because the price of gold has gone too expensive.
Yeah.
So what people are doing is they're buying an alternative to gold, which is platinum. Which is still platinum, which is in the precious metal category. So what you're seeing now, sorry to talk about another asset class, is when I started trading gold as an intern 16 or 17 years ago, platinum was about $200 to $400, $100 to $300 higher, more expensive than gold. Platinum, right? Wow. So let's say platinum was about $1,600, $1,400. Gold is maybe $1,200 per ounce, right? But then all of a sudden you're seeing this huge demand for gold, and then especially from 2022 to now, gold is now 2 to 3 times the price of platinum.
Really?
Yes. 2 to 3 times the price of platinum.
Wow, that's good.
Yes, that's how crazy it is, right? But what that means is platinum is now seen as a cheap asset, right? And it's also precious, and it also has use cases, catalytic converters in cars, a dentist. It also has all these use cases as well, and it's good jewelry, right? I wouldn't mind wearing a platinum ring.
Yeah, even from what you said when you started as an intern and how platinum was, the thing. I actually remember the hype about platinum.
Yeah.
Across the music industry, everyone was talking about platinum.
I remember joining this gym in London. You had platinum membership, gold membership, silver membership.
You see,
right?
Platinum ahead of gold.
Platinum, was like, wow, you get all these things, and then gold is out and silver is okay. Right? This was like 17, 20 years ago.
Yeah, definitely.
But now
platinum
it's like, now it should be gold membership, platinum membership, silver membership.
They're bronze.
They're bronze, for everybody else.
Yeah.
So what that means is, on the precious, and then so what I'm seeing now is I'm seeing platinum just catching up to gold. So I like to trade those sort of things, right? Where something that was more expensive than gold is now by $200, $300 is now 3 times cheaper than gold, or gold is now 3 times more expensive. So what that means is economics should tell you that platinum, trading economics, investment economics should tell you that platinum is going to catch up.
Yeah.
Right. So I'll give an example of platinum trying to catch up. In April, for example, gold went up by $100. Guess how much platinum went up by? $400.
So that's literally
it's catching up. It's catching up.
Reduce the gap.
So year to date, gold has gone up by 23%. Platinum is up by 40%. And you can also buy platinum ETFs, maybe not on the Nigeria exchange, but you can buy them on a lot of these platforms. So anyway, how do you make money? So you can buy low, sell high, right? So you watch the markets. You could buy silver is another asset class that's also quite interesting as well. It's another cheaper alternative to gold. But yeah, you can buy precious metals and buy now, hold it for a while, and then sell it when the price goes up. So there's no dividend yield with these assets, but there is prices appreciation.
Okay, so with what you've said now, right? What returns really have NewGold ETF investors, experienced in Nigeria in 2025, really?
Oh man, they've done well. They've done very well. Yesterday, I think I mentioned about just over 90%. Definitely done very well. So it's been a good investment if you're a new gold investor. Over the past year as well, it's been very good. Yeah, definitely.
So definitely, I mean, it's something. If you're looking to invest in gold, then the NewGold ETFs.
Yeah, definitely, man. NewGold ETF is easier. It's easier access. I mean, I heard that the markets in Abuja that you can buy gold or Nasarawa, however it is. But
really,
but I mean, I don't know. Yeah, just call your broker. Just call your broker and buy it. It's easier. Yeah. It's easier, and also it's cheaper, right? It's cheaper, so you can actually just I think it's about 55,000 naira a share, or maybe it's 55,000 naira a share. Please forgive me, but it's cheaper. As against buying a physical, right? Yeah, definitely.
We will probably be measured in kilograms or so. It makes sense. So with that, right? So how do currency fluctuations, especially changes in the naira dollar exchange rate, how does it impact returns on gold investments for Nigerians? Really?
Yeah, so because it's a dollar priced assets, but priced in naira on your side, there's that extra cushion of the currency hedge. So naira goes down, naira depreciates, naira gets weaker, gets softer. The price of the naira assets should go up, right? Because it's a dollar asset. It's a dollar asset price in naira. That's the best way to describe it. So it can also work as a good currency hedge. It can also work as a good currency hedge.
Yeah, it does. Even in the international trade and everything, currencies are backed by gold anyways.
Exactly. Yeah, definitely. On international trade, and like I said, the central banks are buying more and more gold, right? So gold in the central bank books have gone from maybe 5% of their total assets to 22% of the reserves, right? You're having central banks like Ghana buy a lot of gold, and you're seeing. I'm not saying gold is single-handedly the upside to Ghana's economy lately, but it's also added to it. Definitely.
Yeah. I'm going to invest in gold.
Yeah, you should. I mean, listen, like when as an investor, right? I've always just looked at what the big boys are doing, right? You try to go through, you look at these big mutual funds like BlackRock and whatever, and you try to see, okay, what do they have in their portfolio? There's nothing that stops you from looking at central banks to find out what they have in their portfolio too. Yeah. Right. So why not just look at what those guys are doing and just imitate them? Sometimes it's just the beaten path. The beaten path is the path of least resistance. Why stress yourself?
And I think you actually mentioned it on one of the episodes of Drinks and Mics. And to be honest, BlackRock, for instance, those guys own a great deal of the S&P market in America. I heard they have over 80%.
Yeah, I can't speak to that, but I know they do. They have they're huge asset managers.
So they own a lot. High shareholders.
It's going into other asset classes, right? So sometimes just buy as an investor. I just buy the index, right? Warren Buffett. There was a time. I'm trying to remember, Warren Buffett did this whole thing that he would give $100 if he's seeing a fund manager outperform the S&P over whatever amounts of years. Sometimes just buy the index. The index is doing well. I just buy what works. I don't like stress.
You don't need to trust me. I mean, these days you need to work smart, really.
There's a lot going on, man. There's a lot going on. There's no lights. The water's dirty. Let me just buy the index, man. There's a lot going on.
I'm telling you, man.
Yeah.
Okay, so we're going to risk and considerations now. Okay. So what are the key risks Nigerian investors really should be aware of when investing in gold ETFs?
I
know you mentioned it, but I just want it.
You want me to? Yeah. So I mean, first of all, you have to look at the underlying, right? The underlying is gold, so you have to look at the risks associated to gold. So the risks are gold doesn't go up, gold goes down. The ETF gets affected. Another risk is you're also looking at, you need to also look at the house that issues the ETF.
Okay.
One of the reasons I like the gold ETF is the house that issues the ETF is ABSA.
Okay.
Right.
ABSA.
ABSA, the South African bank.
Okay.
Yeah. So and then there's the AAAU ETF, which I mentioned, that's also issued by Goldman's. So if the house is a house that is solid, is trustworthy, I'm not going to go into ratios and profitability ratios for ABSA, but ABSA as a bank, if you're comfortable with the house that issues the ETF, then but those are the risks to look at. So you look at the underlying, you also look at the risk of an ETF itself.
So with that, right? So should like policy changes, for instance, maybe CBX for forex policy.
Yeah.
Should Nigerian investors consider that as well? Should it be a concern rather?
So I don't think gold cares about what Cardoso does.
Okay.
I don't see how I'm also going through in my head as I'm talking. I don't see how the price of gold will be affected by the monetary policy rate of Nigeria. I mean, gold but America is quite huge, right? So one thing to mention is when I talk about the demand legs for gold, I talk about central banks, yes, jewelry, yes. There's also the use case where gold is used in a lot of technology.
Really?
Yes. So tariffs can affect that demand, right? So US tariffs can affect that demand, right? So that's something to think about. And I'm just, you have to consider that now.
Yeah.
But there's a new leg of demand in technology for gold, which is AI. So a lot of these GPUs that AI is used, they have a gold component. So with the increase of AI, there's an increase in demand on that technology side. But a risk to gold could be the technology demand that is affected by whatever happens globally, like tariffs. So that's a risk, right?
Okay.
But I'm comfortable enough with gold to sort of give an outlook that gold still finishes the year higher than it does now. Even with those demand legs, right? Central banks still buying. Maybe it's reduced a little bit in Q2, but they're still buying quite aggressively. The jewelry side is poor, I'll be honest.
Yeah.
But there's something called the wedding season, in particular the Indian wedding season. So generally between September, October to maybe February or March, there's this huge. So in Indian weddings, there's a demand for gold.
Really?
Right, because they give gold as a gift to the newlywed couple, and there's huge demand. So this actually affects the price of gold. Yes, because of the huge demand. So there's an Indian wedding season coming that I believe should maybe soften this reduction in jewelry demand. There's still the inflow from investments, which are ETFs and global ETFs and bars and coins. And then one needs to also look at potential Fed rate cuts in September, Q3 or Q4 that comes in. Fed cost rates, the dollar should get softer. If dollar gets softer, gold price goes up. Yeah, so there's still quite a few macro factors coming into play that will strengthen the price of gold. Gold is softened, like I said recently. The demand factors came into play. Also, the dollar strengthened a little bit because the dollar had a huge dollar depreciated massively in Q1 and most of Q2,
especially when BRICS came up and all that. Right?
Yeah. So naturally, there will be a bit of a relief rally or short squeeze, whatever you want to call it, on the dollar to sort of give the dollar a bit of strength. And I'm sure you've seen it in Naira strengthening a little bit as well. But that's mainly Naira weakening a little bit recently. That's mainly, in my view, based on the dollar strengthening. And that, I would be remiss if I didn't say that didn't affect the price of gold. But still, H2, if the Fed cut rates in September, which I partly believe they will.
Yeah.
it softens the price of dollar, which strengthens the price of gold. So so that gold risk, you have to always pay attention to the price of to the gold risk on that fundamental level. But my outlook for gold for the rest of the year is gold ends the year stronger than it is now. I think gold right now is about $3,300 per ounce. I think it should end the year. My model tells me 3,600, 3,700. So another $300 or so on the price of gold for the rest of the year.
Another addition, right?
Yeah, $300. Yeah, $300 on the price of gold.
Okay.
But that means if you look at the platinum to gold, so platinum should also then end the year another $600, $700 on top.
So on top, there's only 40% increase they had.
You're looking at, if I'm looking at how many standard deviations to the price of gold, how many times platinum moves when gold moves about 3 times. 3 to 4 times. So you should, if that correlation stays, then it should technically have the same impact.
Have the same impact, yeah. Fair enough. So I mean, definitely, this is you've explained a way to different ways to maneuver, stay safe. But what pitfalls have you seen in retail investors? What pitfalls have you seen them fall into when trying to invest in gold directly? If you have any,
man. I mean, you hear stories, right? Maybe somebody thought they were buying it from somewhere and it wasn't real or it didn't exist or there was no buy. You hear all these stories. And as a retail investor, the idea is you're busy with other things in your life, right? You don't have no time to check this seller. You have no time to do this, to do different things, or to even find someone, whether it's a consultant or an advisor that can advise you properly or to source it properly. Like I said, if you ask me to buy you gold now, I would not know where to go, right? So buying physical gold comes with its own issues, and you talked about insurance of theft and different things, right? So those are the sort of pitfalls. I mean, I haven't necessarily heard, like I said, that you hear things. But for me, when people come up to me to talk about gold, I just advise them to buy the ETF. It's just easier. It's cleaner.
Safer. You know what I mean? Physical, you're exposed to the risk of actually buying fake gold.
100%. And you wouldn't know. Do I bite it? Even if I bite it, where do I bite it?
Use those, their checkers, whatever it is. You get the
there's so many pitfalls that could befall you. But just do an easy thing. Just call your broker and then pick up the ETF or open your phone app and
use an approved trading platform.
Exactly.
Okay, so being practical now for a Nigerian who is new, to investing in gold. How would you advise I start really?
Call me. If you have there are quite a few. The easier one is I'll just mention the Nigerian markets. There are quite a few brokers that give you access to the stock exchange. So you can just call your broker and buy. But also I play around with Trove and Bamboo a little bit, and you can see these ETFs are on it. I quite like. So there's quite a few ETFs that I have on these apps. I have the Bitcoin ETF, which is IBIT, but I also have gold ETFs, which is AAAU. So an easier way to do, man, just open your phone app and download the app. Open an account. I'm not going to advertise.
I think you've even done enough.
They should pay me for advertising.
Pay you for that.
You guys, really? You have my number. Call me.
Please call him.
Pay me.
So I mean, with that, right? How should investors decide? What percentage of their portfolios to allocate to gold, really?
That's usually an interesting one, man. That's usually an interesting one because that also depends on so many things, and it's hard for me to give you a number right now because it also depends on your risk tolerance. It depends on so many different things, man. So it just depends. It's hard. I'll need to sit down with someone to find out, okay, are you low risk, medium risk, high risk? If you don't like risk, I would say, okay, I'll just give a ballpark. For me, I put as much of my assets as possible in gold, as much as my cash rather as possible in gold. Because for me, it's so for me, I'm playing a black swan trade. All right, let me explain what a black swan trade
I was going to tell you.
Yeah, so in 2007, this author, Nicholas Nassim Taleb. Yeah. Amazing mind, man. Amazing mind. He wrote a book called The Black Swan. Okay. The Black Swan is an event that is categorized by three things. The first, let me try and remember this now. It's been a while. The first one is this event is something that nobody saw coming. Okay. Right. The second thing is it's impactful. Like it shakes the world or shakes whatever it is. The third thing is when it does happen, everyone is saying, "Oh, when I look back, I saw it coming." Right. A typical example is a subprime mortgage crisis. Okay. So subprime mortgage crisis was, people were giving mortgages to people who couldn't pay back. Right. Yeah. Right. And then when it happened, it shook. It rippled into the global financial crisis. It was quite huge. Yeah. Lehman Brothers.
The global recession.
Yeah. Lehman Brothers. Everybody went down. And then everybody said, "Hold on a minute. Oh, you were giving mortgages to people that couldn't pay back. Of course it would happen." There you go. So that's a black swan. Yeah. So for me, gold is a my gold trade is I'm trading on the fact that there's a structural change. There's a black swan event that's about to happen. Mm-hmm. Right. Not everybody can see it coming. But some people can see it coming. And when it happens, when all these central banks, when the BRICS guys come into play, when everybody has realized that the US is no longer the standard, it's going to be quite impactful. And then when that happens, everyone's like, "Oh yes, of course," because since the 70s, everybody's been using the US. Yeah, so for me, it's a black swan trade. So for me, I'm trading that, right? So in that sense, on the high risk side, I'm putting a lot of I'm pushing my allocation into that because I'm trading on this black swan event that's about to happen. It might take 2 years, 3 years, but it's going to happen.
And you probably end up telling them, "I told you so."
Do you understand? Yeah. So that's my black swan trade. Let me go back to the question. I'll say maybe 10 to 20% of your assets should be in gold.
Gold.
Yeah. So I got carried away because, like, for me, this black swan trade is
it makes sense.
A trade.
It makes sense. I appreciate the fact that you close that way. I understand you better.
Yeah. There you go. So, I'm looking for a black swan trade.
I'm going to get the name of that guy. I'll probably look up that book.
It's a good read, man. He's a brilliant mind. Yeah, okay. I'm a modern day philosopher.
Okay, so with that, right? Do you recommend the long-term buy and hold strategy? Or?
Yeah, definitely, man. So, definitely. So, medium to long-term, gold makes sense. If you look at it from whatever time you're looking at it, right? 2012, 2020, 2022, it's made sense. And one of the easiest ways sometimes to predict the future, get a close prediction of the future, is to look at what has happened in the past. Yeah. Right. So if something has been good for over the past few years, then chances are it's good going forward. If something has been bad for the past few years, chances are it's bad going forward.
Okay. So, but if the naira strengthens really or stabilizes, right? How would it affect?
Yeah. So
the returns on
so that's something to look at, right? So on the short term meaning maybe for the rest of the year, we've seen a stable naira. So I mean, if naira strengthens, it should have a negative impact on the ETF. So I guess going on the NewGold ETF. So going back to the risks, I guess that's something I didn't think about, and I apologize for that. Yeah, so but that happens on a naira hedge, right? So if you're hedging, you're trading against the naira, if it goes up, then it should affect you negatively. But there will be this net impact, right? Where gold goes up, naira goes down. Gold goes up, naira goes up. Sorry, you should have a flat performance. But a stronger naira is a risk to the NewGold ETF that's priced in naira.
Okay, so
so that's something to also consider.
Consider as well.
So if you think the naira is going to end the year at 1,400 or 1,300, then there should be technically, if 1 + 1 = 2, everything remains equal. If all else remains equal, then it should be a slightly negative impact on the ETF.
So I mean, with that said, global and local economies also, add to it as well.
Yeah, definitely. Yeah. So that's it's something to consider.
Yeah, definitely something to consider. So we're going to the latter part of it, right? Gold versus the other hedges. Really.
So name them.
Yeah. So I have a list here. So real estate.
Okay.
Gold, crypto, dollar savings, and Eurobonds?
Yeah, let me start with Eurobonds. I love Eurobonds.
Yeah?
I love Eurobonds, man. Eurobonds, Eurobonds are an asset class that we trade and we invest in. Because, you get your nice dollar yield. You get some 9% coupons. 10% if you buy some corporate Eurobonds. So Eurobonds for retail investors it can be difficult to get in because the minimum buying clip for if you just want a Eurobond is like $200,000 or 200,000 units.
Yeah.
Although there are mutual funds that allow you and asset managers that allow you to get Eurobond exposure cheaper.
Okay.
But I'm not going to knock Eurobonds off. Eurobonds, if you can, should also be a part of your portfolio. But Eurobonds, so the risk with Eurobonds is you're affected by credit risk of the company, credit risk of the company, and also you are affected by sovereign risk, right? Give an example. Ghana defaulted on their Eurobonds.
Really?
Recently, maybe was it 2-3 years ago?
Okay.
What that meant is the Ghanaian government came up and said, because the bond is a debt, right? It's a loan. They just came out and said, "I'm sorry, I can't pay you back."
Just like that.
Yeah, just like that, just like that. So that's that risk. So I personally, I don't call you a Eurobond what I call it a hedge. It's an exposure type because it's dollars and it's good and you get a dollar coupon. But you have to be very aware that there's a possibility of a country defaulting on this bond. Zambia defaulted on the Eurobond. Ethiopia defaulted on the Eurobond. This is all recent.
Yeah?
Yeah.
Finish.
No, go on.
Okay, so are those financial tactics or they just...
I don't know what you want. I don't know.
You don't want to speak for them, right?
I don't know what it is, but it's understandable though. So, see, even me, right? I'm always weary when there's a company that has revenues in naira and is trying to borrow dollars.
Yeah, the conversion rate is always
because I'm like, you're exposed as a company. I'm always, number one, I think it's unfair for investors to lend dollars to a naira generating company because you're putting pressure on this company to make me money and then convert it in a world or in a country or in an environment that the currency that you're making as revenue is depreciating. It's a lot of struggle to pay back.
To be able
and then number two, as the issuer of the bond or the issuer of the debt, I'm always like, if you're making naira, you're making cedis, why are you borrowing dollars?
Yeah.
Do you understand?
Fair enough. Yeah,
it's a mismatch, money. Right? Yeah, it's a mismatch, right? I think I lost my train of thought. But yeah, so there's a risk to Eurobonds that you have to consider. But I'm not knocking it at all. I'm just saying there's a risk to Eurobonds one has to consider. And that's that risk: credit risk, sovereign risk, sovereign credit risk. And then what was the other one? Real estate. I think we mentioned real estate already.
Real estate. So dollars. We've done dollars, right?
No, we haven't done USD.
USD.
Yeah.
So we've done real estate, scratch. We've done crypto.
Yeah. As much as I like it, I'm still saying diversify.
Yeah. We've done Eurobonds. So dollars, USD.
Well, as in just taking your naira, changing it to dollars and parking it. I mean, that's fine. You can do that too. But, why do that when there's a potential more upside? Because gold is priced in dollars, right? So naira gets weaker. You hold dollars, naira gets weaker. Your dollar's great, right? But put the dollar to use.
As against just keeping it.
Yeah, just keeping it. Just put it to use. So,
buy gold.
Yeah, buy gold. Next time I'm wearing gold, address. Draped.
You probably should have come with some gold chains.
Yeah, I should have. I'm not wearing enough gold. I have no gold on.
Don't worry. Don't worry. Your knowledge is good enough.
A ring.
Okay, so what we are there cases where gold should be combined, with other hedges in a diversified safety net, really?
Yeah, man. I mean, there are other safety safe havens. So historically, safe havens have been Japanese bonds, US treasuries, Swiss francs.
Yeah.
I think German bunds, right? US, the gold plays at diversification away from US, right? So where US treasury is still a safe haven to a degree, I've noticed a correlation between US Treasuries and US stocks. It's normally, so when we were learning about investments, they said when US stocks go down, US bonds go up. There was a negative correlation, but there's been a shift in this correlation. There's just been they've been going up together, going down together.
Okay.
So that's another reason why that diversification away from it is okay. You know what? US Treasuries and US stocks are not behaving pretty much the same. I need to look at something else. But another safe haven that I quite like is Swiss francs.
Okay.
Now, these are things that might be hard.
You don't hear
get.
that thrown around a lot these days.
The Swiss franc is quite interesting, and has performed great against the dollar this year. The Swiss franc is hard because you can't get a Swiss franc ETF on the NGX, but you can on these apps. You should be able to get a Swiss franc ETF. Okay. On these other apps that I'm not going to mention anymore.
Don't mention it. Do your research. Your research.
But the Swiss franc is another good safe haven. Okay. Japanese bonds have been very interesting lately, where Japan is now seeing some inflation. Japanese yields are going up. As Japanese yields go up, this is another reason why US treasuries have become funny, because Japanese investors are the biggest holders of US treasuries. Yeah. Japan has been running a negative yield for a while. Was running a negative yield for a while and really, really low yields. And Japan really wanted inflation. Now they have inflation. So you're now finding that Japanese investors should start selling US treasuries to now go back home and buy more Japanese bonds. But but Swiss franc is another interesting safe
one to
haven,
look into.
Yeah.
Right? Okay, so
that's another show.
Yeah, another show.
That's another show. Yeah.
So how would you rank these hedges for a Nigerian in 2025?
Yeah.
And how would you rank them? What would your list look like and why?
So I'm looking at, because Nigerian stocks is still a good play for me in my mind, right? Especially as yields are going down, bond yields are going down, treasuries are going down. The natural rotation should be, okay, I'm going to take profits in my bond positions, or at least half the profits in my bond positions, and buy equities. Because equity still has some upside regardless of the widening of the risk premium in equities. But precious metals is still my number one hedge. Hedge, right? If we're talking about hedges. So I'll say precious metals is still up there. Swiss franc ETF is something that I'd encourage as well. Okay. So in that aspect, gold, precious metals is still there, and then look into other currencies like the Swiss franc as a hedge. Yeah.
Okay, so I think you
Japanese bonds might be hard to get.
As well.
It might be hard. I think that one is hard to get hold of.
Yes.
Yeah. That one, I don't know.
They probably need to find the app themselves.
They need to find the app themselves. Yeah. But literally on this app, you should be able to find a Swiss franc ETF.
Okay.
That has, just like I said, underlying the Swiss francs, and then it's just ETF. You should be able to just buy it.
Okay. Yeah. Oh, thank you very much, Arnold. That was the last question, by the way. I wanted to let you know, but that was just so much.
Yeah.
So thank you very, very much. As the audience, you heard, Arnold started with history of gold, right?
Yes.
In Nigeria, Africa.
From a galaxy far, far away. Billions of years ago. Do you watch Star Wars? Are you a Star Wars fan?
Yes.
Yeah. Okay. I'm a huge Star Wars fan.
He's covered it all, really. Yeah. So with that, you know how to apply yourself. You know how to buy gold, where to buy gold, understand the risks involved. The difference between buying physical gold itself and ETFs as well. How they've risen. The whole park, right? And I want to thank Arnold very much for being here. And so, in a nutshell, right? I'll tell you for sure. They say all that glitters is not gold, but we now know gold. We are sure
also
gold glitters.
Gold also glitters. I had to check myself first. Yeah, gold also glitters. But not everything that glitters is gold, but gold glitters.
So Arnold,
no problem.
Paid in full.
Yeah, I paid in full. Thank you. I like that.
Thank you, everybody. So look forward to the next episode. Take care. Bye.
All right.